Hi friends, so today we're going to talk about real estate investment. Why should one put his capital into investment into real estate? And what are the advantages by putting his investment into real estate? What are the advantages can one derive as an investor? And the second point we're going to see at what are some of the disadvantages of real estate investment. Then finally the third, well not the final, the third aspect that we're going to see is how can we mitigate those disadvantages by using another route of investment into real estate. And then finally the fourth point, the fourth aspect, how do we evaluate, like how when we evaluate the equity investment, do we have a mechanism of evaluating the real estate investment as well? They're going to see two options there where we can value the real estate investment. So keep a watch along the video, the full entire video, so you can gain as much possible. And please share it to your friends and relatives so that they can also get an understanding of why they should invest in real estate, what are the alternate routes of investing into real estate if they want to mitigate the disadvantages, and then finally how to value the real estate investment. So the first thing, the advantages of real estate investment, it's a low correlation. It has proved it has a low correlation with that of equities, and hence it acts as a hedge against inflation. So that gives us two direct advantages. In addition to that, because it acts as a hedge against inflation, the third advantage you get is you get a capital appreciation on your investment. With rising inflation, with the cost of living increasing in the city or the town or the entire nation, obviously the cost of your investment into real estate also has to go high with the rising inflation. In India, which is noticed that real estate investment gives you capital appreciation of about 9 to 10% if it is a residential flat, and if it is a raw land, it could give you almost to about 13 to 14% of capital appreciation over a long period of time. That's the third advantage. The fourth advantage you get is if you are invested into a residential property, a flat premises where you can give it on a rent, then you can earn a cash flow month on month. And this cash flow you can use to invest into other investment avenues like bonds or debt instruments or equity or gold, or you could use it as a payment mechanism if you have borrowed money. And that's the fifth advantage which you get in real estate investment, that you can get advantage of putting just a 10% down payment on your investment, and then remaining 90% is being given to you as a loan. You take a mortgage loan and you keep paying it on an EMI basis, and by those EMIs are actually, you can get a tax benefit which is given by the government of India. So these are the various advantages of real estate investment which one can avail of. So just to reiterate the advantages, it acts as a low correlation against the equity. It gives you capital appreciation. It acts as a hedge against inflation. With the rising inflation, your real estate property price also beats the inflation rate, and it gives you rental income. That's the third advantage. And it also gives you an advantage that you have your own house. And then finally it gives you tax advantage, tax benefits, wherein if you pay monthly EMI, you can adjust that cost against the rent, thereby paying low taxes to the government. So these are the various advantages. Now let's see what are some of the disadvantages of real estate investment. And then finally we are also going to see the third aspect, how to counter these disadvantages. Disadvantages, as you know, real estate, if you want to sell, if you want to encash real estate investment, it takes months. So liquidity is little low in real estate investment, but nevertheless it depends on the kind of property, the location, the area, the demographics. All these aspects also do matter when you want to sell a particular property. So this is one of the major disadvantage of real estate investment. The second disadvantage is it involves a lot of hassles. It has a lot of additional overheads, like in maintaining the property. You have to find a tenant for the property. You have to upkeep the property. You have to be involved into initial transaction. If you're purchasing the property, it involves visits to government offices, a lot of dealings. But I think a lot of this is actually taken care nowadays by the builders themselves. They make the process a little easy for you. but nevertheless that is the one of the second that is the second disadvantage of real estate investment. But is there a way? Is there a way wherein you can overcome these disadvantages and still derive the benefit of real estate investment? Well, the third alternative of investing into real estate is your REITs. REITs is real estate investment trust. This is a trust, investment trust as a matter of fact. It's kind of a mutual fund which pulls in investors' money, and then this investors' money they invest or purchase properties. It could be commercial properties, it could be residential properties, office spaces, and they rent it out, and then whatever cash flow they derive as part of the trust, they distribute as part of dividends to the shareholders. And these REITs, there are various REITs available in India. They are listed into the stock exchanges. And the popular ones are Embassy REITs, there's Mindspace REIT, there is Brookfield REIT. So these are the popular REITs which are already listed. Apart from REITs, you also have infrastructure investment funds which you can also invest via the stock exchanges. These are all listed REITs which you can avail by investing a small portion of money, how much is possible from your side, without even having to bother to take a loan. Of course, you for investing into REITs, you can't avail a home loan. That's the drawback about REIT investment. But nevertheless, whatever cash you have, for example, you have 10% cash which you would have put into real estate investment. The same 10% cash you could have put it into REIT. So by investing into REIT, you can get much better dividend or much better rental yield compared to what you would have got otherwise by investing into residential property directly. That is direct ownership of the property. So by investing in REITs, you can almost get up to 8% rental yield year on year. Of course, it depends on the price. If the price is too high, then the rental yield will reduce. So you need to see how what the best rental yield which you are looking for, and accordingly decide to invest into REITs at that particular point of time. So REITs is the flavor. I myself have positions into REITs investment, both into REITs as well as infrastructure investment. REIT majorly invest into commercial spaces, office spaces, residential properties, and infrastructure investment they invest into like infrastructure, like like towers, telecom towers. It could even be like power equipment, power facilities. All these are infrastructure investment fund, and one of the popular infrastructure investment fund is owned by Power Grid of India. So this is one of the listed companies in the stock exchanges, which you can actually put your investment and derive benefit of infrastructure investment yield as well. So this is one way where you can avoid the hassles of having to wait for months to sell a particular position into real estate, a real estate. But by taking position into REITs, you have it listed in the stock exchange. Whenever you want, the liquidity is higher compared to that of a real estate physical property. So this is the advantage of by investing into REITs, and you don't have the hassles of approaching government offices and things like that. You can directly put whatever cash you have in hand, investable surplus, whatever you have, which you would have put in equity, you can diversify into real estate investment trust, which will beat inflation over a period of time. So REITs and infrastructure investment trust is one of the method of overcoming the disadvantage of physical investment into real estate. And finally, the last aspect which you are going to see in this video is how can you evaluate whether the investment which you are doing today into real estate or REITs, is it worthwhile to put your money in that. So one of the easiest way is you derive what is the expected rent which you're going to get from the real estate investment and divide it by your total expected rate of return. So now the expected rate of return could vary from individual to individual, and it could also be depending on the historical discount rate which has been provided by real estate investments. So when I say historical discount rates, you could check the historical high discount rate as well as historical low discount rates and average them out and divide the total rental yield for that specific year, which is expected for the specific year, divided by the the expected rate of return or the average rate of return. That will give you the total value, the maximum value which you can invest into real estate or REITs, and to fulfill your expected rate of return. There's another method of how you can also derive the valuation of the property. The other method is based on gross income multiplier. The first method was based on the net operating income factor. The second method, which is gross income multiplier, what you need to do is you need to check similar properties which have been sold in a specific year. Take the total annual income which has been derived from those specific properties. You take the sale value and divide it by the total annual income, which will give you the income multiplier. So likewise, you do it for about 2 or 3 properties in the specific area, similar kind of properties. And once you get the income multiplier, you take the expected dividend which you are expected for the specific year and then multiply it with the gross income multiplier which you have derived it in the earlier step. So once you multiply this with the expected annual income, then or the expected annual rental yield, rental income, so you multiply it and then you get a value below which you can invest. You can invest anything that is below that specific value. So above that value, it will finally end up giving you less returns over a period of time. So you can suit this option. You can check the valuation of property using these 2 particular methods. If you are not clear about this particular method, please write in the comment box. I have put in some description about both the methods into the description section so that it can be easy for you to understand. Well, I've not put much of it content wise on the video in terms of multiplying and things like that. So, but feel free to approach me via my email ID and I'll be glad to help you out. So I have been investing into real estate as well as equity, gold, things like that since the past 13 to 14 years, since the economic crisis of 2009. And these number of years have taught me a great deal of lessons which I am trying to impart to my fellow members on the channel, so that you can get the maximum benefit out of it. So, and do read my book, upcoming book, and it's an interesting book which tells about a lot of aspects about investments. So see you until then and enjoy the day. Bye.